Through the supply chain, we decipher the worldwide trends. From Chicago to Seoul, U.S. wheat was the industry standard for many years. However, that supremacy came to a sudden halt by 2025. For a more reliable and intelligent supply, countries such as the Philippines, France, South Korea, and Mexico looked to Canada. Australia and Argentina. Why the abrupt change? Price per ton is not the only consideration. Predictability is key. Trust is driven by politics and technology. The United States lost ground due to logistical risk and carbon compliance. Let's investigate the crown's slip. 1. Slipping gears. The loss of U.S. wheat's competitive advantage. Slipping gears. The decline of U.S. wheat. Formerly the world's grain gold standard. Now American wheat is grinding against opposition. In the past, bakers and buyers from Manila to Marseille relied on hard red winter wheat from Kansas and spring wheat from North Dakota. However, something broke starting in 2024. Long-term contracts were being moved offshore or north by the middle of 2025. The cost wasn't the issue. Only approximately $8 to $10 per ton of Kansas wheat fell. The deeper problem is U.S. trust. Shipments came to represent delays, red tape, and unstable regulations. Consider the Philippines. A major player in the milling industry, San Miguel Foods, declined a renewal contract with American companies for 110,000 tons. Rather, they signed agreements with CBH in Australia and Viterra in Canada. Why? Since shippers began to see U.S. ports as areas of vulnerability. America couldn't deliver what Canada and Australia could. Europe's stability. The United States imported the least amount of wheat into France in 20 years. The issue? The EU's digital carbon tracing system did not like American wheat. Every batch in Canada has carbon data embedded in QR codes, whereas the U.S. was remained in the EU's carbon border adjustment mechanism, caught in administrative purgatory, CBAM. That is a deal breaker and a delay. The tech stack and compliance game of U.S. wheat are simply not race-ready, even if it still has the horsepower in terms of protein and bake quality. However, it quickly became clear that grain chemistry was equally as significant as grain logistics, creating doubts when chemicals reduce demand worldwide. Creating doubts when chemicals reduce demand worldwide. It's not only about what's in your grain in today's market. It's also about what's not. The herbicide that kills weeds, glyphosate, has become a major problem for American exports. South Korea shocked the world with a new glyphosate residue cap of 30 parts per billion in 2025, which matched stringent EU regulations. The issue was that U.S. wheat found it difficult to clear that bar. Testing of red winter variations ranged from 200 to 400 ppb, which led to halting port operations and conducting retests on about 1/3 of shipments. Meanwhile, Canada anticipated this. Saskatchewan's prairie farmers are eligible to reduce residue under 2023 Clean Farm Transition funding. Air-guided drones for targeted glyphosate administration have even been field tested, reducing exposure to chemicals by an astounding 90%. The outcomes were instantaneous. By mid-2025, 62% of Korea's imports were Canadian wheat. That resulted in a $410 million drop in U.S. revenue. And the Parallel Economics Institute reports that 6,200 jobs were destroyed in North Dakota alone. Food safety is more than just a checklist on this new worldwide track. It gives you a competitive edge. Additionally, Canada is currently circling the United States. Please click the like button and subscribe to Piston Pundit before we go into how logistics further tilted the scales. We have your back at all times, whether you're here to discuss powertrains or policy curves. Bottlenecks at the border and the high price of uncertainty. Bottlenecks at the border and the high price of uncertainty. While Europe and Asia point to regulations and residue, Mexico's change was spurred by something that every motorist fears. X-ray scans, lengthy lines, and a mountain of red tape at ports like Laredo and Mesa made every shipment a customs nightmare in 2025 due to new border regulations in the United States. Simply put, Mexican buyers were unable to continue their everyday routine. Then came Canada's brilliant new through-rail fast lane plan, which allowed wheat to be transported from Vancouver to Baja without ever having to stop for a border check. It was strategic dominance, not only efficiency. The United States' share of Mexican wheat imports fell to 17%, while Canada's share increased from 32% to 38%. The fallout was immediate back in Kansas. Spot prices fell below break, even while silo stocks rose 44%. The odds of a buyer returning to a U.S. grain chain after leaving are only 15% during a 5-year period, according to Purdue economists. It's not a decline in the market. The loss is structural. However, Canada wasn't merely covering the gap as the United States faltered. The playbook was being rewritten. Canada's audacious U-turn, from canola crisis to wheat powerhouse. Canada's audacious U-turn, from canola crisis to wheat powerhouse. The rise of wheat in Canada wasn't only America's failure. The transition from panic to performance was complete. When Canada's canola meal was subject to a 100% tax by China and the U.S. increased the taxes on canola oil, a catastrophe was looming over prairie farmers. However, they downshifted and accelerated into wheat rather than lingering in irritation. Through the Protein Supercluster program, which cost $950 million Canadian dollars, Ottawa did not abandon them. New high-performance wheat varieties, traceability technologies, and digital infrastructure were all financed by policymakers. Canola-dominated fields were suddenly yielding 90 to 100 bushels of spring wheat per acre. A farmer close to Winnipeg referred to it as the Prairie Belt's rebirth. And purchasers paid attention. By 2025, Canadian wheat was establishing standards rather than just filling ships. More than 50 countries were using real-time protein, moisture, and residue data that could be accessed using QR codes. It was more than simply grain. It was a supply chain made possible by technology. The idea was even adopted by CBH Group in Australia. In the meantime, U.S. exporters continued to struggle with inconsistent state standards and sent PDFs. In July 2025, the final approval was granted. Once dismissed as poverty grass, Beijing approved the $34 billion Bunge-Viterra merger, giving Canadian grain a strong presence in Asia and Europe. With tech, trust, and banter to match, Canadian spring wheat is now spearheading a digital agriculture revolution. How did Washington react then as Canada surged ahead? Is Washington's countermove too little, too late, or a last-chance fix? Is Washington's countermove too little, too late, or a last-chance fix, with its standing in the world declining? In March 2025, Washington ignited a long-overdue response. In an effort to improve the reputation of wheat in America, the USDA introduced the Strategic Grain Reliability Act. It sounds encouraging. Geopolitical risk guarantees to reassure anxious purchasers, digital export certifications to replace antiquated paperwork, and IoT sensors connecting silos to federal labs. Here's the catch, though. Rollout is being delayed by congressional slow-lane budget battles, partisan congestion, and a distracted capital. In the meantime, U.S. wheat futures keep going through a wild ride. Even if preseason export volumes reached a 12-year high in June, America now accounts for 10.5% of the world's wheat supply, the third lowest amount in decades. In an effort to regain ground, we're sending more while carrying less weight with each transaction. Though Nigeria's infrastructure issues and India's price safeguards aren't exactly easy targets, the USDA is nonetheless interested in new markets like these. Canada continues to land the contracts that were once ours while America plans. This leads us to the last query. Will America regain its grain glory in the final lap? Can the United States regain its grain glory? Fields and harvests aren't the only aspect of this. It concerns the ability of American agriculture to change course quickly, because Canada created a cutting-edge, data-driven machine that consumers now trust, whereas America has been coasting on legacy. If there is no progress on the Strategic Grain Reliability Act, the U.S. can become irrelevant in addition to losing market share. We now look at you. Has trust been permanently destroyed, or can American wheat restore it? Is Canada's hegemony the result of trade instability and ideal timing, or is it the new normal? Rather of imposing retaliatory tariffs, should the United States focus more on ag-tech innovation? Post your thoughts in the comments section. We want to know what you think of the video. Sign up. We want to know what you think of the video. Sign up.